Coming up on Market to Market, excessive heat presses on Middle America as tropical storm systems hit the coasts. The arguments for and against a controversial carbon pipeline. Incentivizing farmers to protect a natural resource, and market analysis with Dan Hueber next.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Sukup Manufacturing, celebrating 60 years of innovation as a family-owned and operated manufacturer of grain storage, drying, and handling equipment out of Sheffield, Iowa. Learn more at sukup.com.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, August 25th edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. Monetary policymakers head to Jackson Hole, Wyoming late each summer in a tradition dating back decades. The retreat atmosphere allows for a change of scenery, even if the decisions stay the same as if the leaders were still in Washington, D.C. Fed Chair Jerome Powell said Friday a further interest rate hike is likely as the economy has been growing faster than expected. Mortgage rates hit a 22-year high this week of 7.23%, keeping many buyers on the sidelines. The higher interest rate has stymied the existing home market as July's reading fell 2.2%. The year-over-year pace is off 17%. Durable goods orders tumbled 5.2% last month, with fewer contracts for Boeing. The core reading was higher when transportation was removed. Wednesday's high temperatures in Des Moines was only 97 degrees, 4 degrees cooler than Phoenix. However, the heat index in Iowa was 114 compared to 101 in Arizona. Meanwhile, the National Hurricane Center was tracking 5 disturbances at one point this week. Our weather wrap starts with Hillary and the rare West Coast system. Here is Colleen Bradford-Krantz.
The first tropical storm to hit Southern California in 84 years has moved on, leaving heavy damage in its wake. Large equipment led the cleanup of mud in mountain and desert towns, with area residents lending a hand. The amount of precipitation that swept across the Death Valley region hit hard in an area unaccustomed to heavy cloudburst.
In the hills above us, we had approximately 13 inches of rainfall in a short amount of time. That's really the kind of rainfall rates that cause the damages that we're seeing downstream. So that 13 inches basically equates to about a 1,000-year storm.
As Hillary moved east, Nevada felt the impact of the storm clouds, as did areas of Oregon and Idaho. Tropical storm Harold came ashore in southern Texas this week. Here in Corpus Christi, thousands of homes were battered by high wind and heavy rain, eventually losing power as the first storm of the season slammed the area. Harold stayed just below hurricane status. One of the hottest weeks in the grain belt lived up to its forecast. Triple-digit temperatures and heat indexes blanketed 22 states as more than 126 million people were under heat warnings for several days. The drought monitor actually improved as a whole in the continental U.S., staying consistent with the last several weeks of readings. However, conditions intensified in the areas already plagued by drought. For Market to Market, I'm Colleen Bradford-Krantz.
5 states are going through the process of hearings involving a carbon pipeline. The process takes time and many phases. This week in Iowa, what could be 6 weeks of hearings began for the Summit project. David Miller was there.
Summit Carbon Solutions wants to take and forever control our land for their private profit pipeline scam. A
This week, the Iowa Utilities Board began what is expected to be several weeks of evidentiary hearings. When they are finished, the board will determine if a construction permit will be granted for the controversial Summit Carbon Solutions CO2 pipeline. Before the hearing began, about 200 landowners and supporters gathered outside the venue in Fort Dodge, Iowa.
Our safety, our land, our lives, and livelihoods are more important than Summit's private, for-profit bottom line.
This hazardous, risky pipeline.
Witnesses were concerned about who would be responsible for soil compaction, damage to drain tile, what they called ambiguous language in easement contracts, and the consequences of a pipeline rupture along the 700 miles of the Iowa portion of the Midwest Carbon Express. The bulk of those testifying objected to the possibility that Summit would be granted the right to use eminent domain when landowners refused to sign a voluntary easement.
The hazardous pipeline, as proposed, could limit future homes, livestock facilities, machine sheds, or other building expansions, and limit the versatility of our farming and future farming operations.
A spokesperson for Summit Carbon says they have signed easement agreements with 73% of the landowners along the 2,000-mile, $5.5 billion underground pipeline that stretches across 5 states. Monty Shaw, executive director of the Iowa Renewable Fuels Association, an industry advocacy group, says Summit Carbon is just satisfying the needs of their customers.
But we shouldn't pretend like when folks show up here in a lot of red shirts that they speak for the landowners. They speak for a minority of the landowners, a voice that's theirs to have and that should be heard. I'm not saying they shouldn't be here, let me be very clear, but they do not represent the vast majority, the supermajority of landowners.
The Iowa Utilities Board is expecting the testimony to last through the end of September. For Market to Market, I'm David Miller.
Those who depend on the Colorado River for their farming and ranching operations have been told to drastically cut their usage on their own terms, or the federal government says they will step in and mandate the cuts for them. Conservation is one part of the water equation. Quality is the other. Achieving clean water in a rural setting has often taken a carrot and stick approach with limited success. Peter Tubbs profiles new efforts to prevent water pollution in Minnesota during our cover story.
Farming is often a balancing act between environmental sustainability and financial viability. On one side, you are out to make money, and on the other, you are protecting your most valuable economic resource. The Minnesota Water Quality Certification Program was begun in 2015 to help incentivize farmers to protect one of their valuable resources, water. Almost 1,200 farms have been certified, covering nearly 1 million acres of Minnesota farmland. Certification also deems an operation in compliance with any new water quality legislation for a decade. The regulatory certainty has become an attraction for beginning the water certification program. Brad Redlin is the Water Quality Certification Program Manager for the Minnesota Department of Agriculture.
That's really an insurance policy for those 10 years to know they're either going to be in compliance with it after those 10 years or they have 10 years to make any tweaks that they might have to meet some new law.
The Water Quality Certification Program reviews every part of a farming operation that might affect the water leaving a farm, from tillage practices to manure management. The surprise finding is that farms that fulfill the parameters required by the water quality certification are consistently more profitable.
When you do site-specific risk assessment response and analysis, you're maximizing your performance on the farm. We have these licensed accredited agronomist conservation planners that go out and work with the farmer throughout the entire operation, every step of the way, maximize their performance. It's going to be more profitable. It's no different than any other industry or any other application of management to a production challenge. If you maximize that performance, the profit's going to be there, and that's what's been shown to happen.
The study's authors emphasize that being certified is not the key to improved profitability, but rather managing a farming operation at a level that would qualify a farm for certification is an indicator of other work being done. Keith Olander is executive director of Ag-Centric, a state of Minnesota program that bridges the gap between agriculture and education.
To become water quality certified, you have to step through the process, which means that I am watching all of the practices on my fields and within my livestock. Those are things that maybe we take for granted in some of the farming operations, but it isn't maybe uniform in practice. But it tends to bring those out to say that helps us become more profitable. So yes, I'm a little leery to just say, you're water quality certified now, and you're going to be more profitable. But undoubtedly, that cohort after over 4 years and starting to get over 100 farms, it's really hard to argue that.
The fact that the water quality certified managers are still showing to be more profitable than even their cohorts within this financial service provision process that the Farm Business Management Program provides, that it just more clearly delineates the fact that what certification values is what's profitable.
Producers who market directly to consumers use their water quality certification to differentiate themselves from others in the market.
Water quality certification is an enhancement to your farm over the long term. I think it's a bold statement, but it's a fair statement that we can make. So the consumer can draw back a little confidence to say we're doing both of those in a fair way, that we're supporting farmers to be viable economically and environmentally sustainable.
For Todd Stencil, who farms in Waseca County, Minnesota, reducing tillage passes, one of the requirements to get certified, lowers input costs and creates a higher performing soil.
Bottom line, the number one would be time saving. The amount of labor savings and fuel savings is significant.
To achieve certification, Stencil made adjustments to the tiles on the edges of his fields. He installed low-velocity water quality inlets that slow the access to the tile once ponding occurs, reducing the amount of soil that is washed down the tile and keeping the trash from harvest on the field.
It was a fairly simple process. I had inquired about it through the NRCS and our local soil and water, got the paperwork, kind of contemplated it, and then with the help of the NRCS, was encouraged to apply for it. On my particular farm, because of the ridge till and strip till I was already using, it was actually very simple to implement the different things they recommended. All I had to do was change a few of those, prove the paperwork on my current practices, and I was in.
Water qualified certified farms tend to have more livestock than the average farm in Minnesota, which may require a higher level of management. Access to manure reduces input costs while also improving soil chemistry. That practice of examining every dollar earned and spent on the farm and determining the unique best practices for each producer often improves the profitability compared to neighboring farms.
I don't want anybody to say, if I go get water quality certified, I'm going to make more money. I don't think that that's the case. I think it's always the idea that if I'm going to be a successful business, I got to think like a successful business. And certainly what water quality has pointed out is that those people that are certified think like successful business owners. But that just comes back to this management of soils, the environment, and that falls back into my economics.
For Market to Market, I'm Peter Tubbs.
Next, the Market to Market Report.
It was the heat and the humidity this week that blasted crops over several states, leaving a void of limited moisture to finish off a crop in the field and in the trade. For the week, the nearby wheat contract lost 17 cents, while December corn subtracted a nickel. The soybean complex pressed higher on heat and export purchases, with some technical assistance thrown in. The November contract added 35 cents on the week, and the December meal put on $26 per ton. December cotton expanded by $3.69 per hundredweight. Over in the dairy parlor, September Class 3 milk futures strengthened 39 cents. The livestock market was mixed. October cattle improved $2.35. October feeders gained $3.28, and the October lean hog contract sold off $2.30. In the currency markets, the U.S. dollar index rose 74 ticks. October crude oil declined 62 cents per barrel. COMEX gold expanded $22.90 per ounce, and the Goldman Sachs commodity index increased almost 6 points to settle at $583.20. Joining us now is market analyst Dan Hueber. Dan, good to see you.
Good to see you. Thanks for having me.
Wheat has been troublesome. Had some,
Good
there's a
word
lot
for
of
it,
people,
yes.
there's a lot of, we got a couple of questions that don't like the outlook of it.
Right.
Do you?
Well, I think for the time being, at least, we've probably seen enough punishment to the downside. Granted, it doesn't have a lot of good news on its side either. There's no real issues around the world at this point in time, production-wise. We don't know what Australia or Argentina is going to look like here over the fall and winter months. But that said, it's there's not much of a friendly story, and corn's really not far behind. I mean, corn just does not have a good demand structure right now, so the two work side by side.
All right, I'm in domestic wheat production, and I'm hearing what you just said. What do I do?
Well, I think there's no reason to panic at this point in time. I think all of the markets, I mean, granted, commodities tend to move in tandem with each other, not that we don't separate from time to time. Beans especially look like they have a little potential to rally here right now. And again, we don't know what these yield numbers are going to come in, but boy, if you ended up trimming a bushel off of the nationwide bean yield right now, it would put some life into the bean market. And I think that's going to support corn, which in turn is probably going to support wheat. Runaway rallies, certainly not, but at least better opportunities to sell than we have today.
So wheat needs friends.
Wheat definitely needs friends.
Corn this week had a lot of heat, but there's a concern that maybe this crop was ahead. This heat didn't matter. The market kind of maybe agreed with that sentiment. Do you?
I think to a large extent, yeah. I mean, and again, heat was primarily from Iowa west, or I should say really Illinois west. We had heat for 3 or 4 days in Illinois. But far enough along, probably not significant damage. Granted, it looks a little tougher here in Iowa than it does in Illinois. But then you go east, Indiana, Ohio, Michigan, Wisconsin, really crops look beautiful there. And yes, Iowa is certainly the big one, and Minnesota, according to Pro Farmer at least, is going to struggle this year. But that said, not enough to, when you're talking about a 2.3 billion bushel carryout, you can lose a couple 100 million bushels, and it's not going to change the picture all that dramatically, particularly when demand is not there to begin with.
USDA is calling for a yield, a bushel to acre of 175. The crop tour today number was 172. So as you plan ahead, we look at maybe harvest lows that may enter into the picture in late August, September. Do you believe a low is in corn?
I believe a temporary low, yes. I think we have a base, you've taken December corn down to this 480 level when it's really kind of floated around here for the last 2 to 3 weeks. That's pretty typical action for corn to when you're at a low ebb of trade. Granted, we still need a stimulus. Maybe that stimulus is a little better bean trade. Maybe we see some export business. Mexico's been, active. Not unusually active, but active in our market here as of late. Again, are we talking anything more than a 10, maybe a 20% rally? Probably not.
What do you like about beans? You kind of tipped your hand a little bit there.
Well, I don't know if I want to say I necessarily like what's going on in the bean market per se. But that said, I think a bushel or two in corn doesn't really make a huge change within that supply and demand balance. A bushel in beans makes a huge difference, and I think there's just enough concern about what happened on these last 2 to 3 weeks when they really should have been filling pods. Some of the farmers I've talked to in Illinois even say, well, the plants look phenomenal. They're tall, they're bushy, but they're just not the pods there. So unless we saw some really late fill, you're probably looking at average bean yields even for some of the best bean fields out there. So.
Again, Pro Farmer numbers, they predict 49.7 after their research this week. USDA still at 50.9. So there's your half a bushel difference, a little more than that.
Yeah.
So if I'm looking at, we're already flipping into next year for that deferred contract, or if I'm looking ahead to harvest this year, what's a strategy for me right now, given there's still a possibility of a bump?
I would tend to say that farmers do tend, at least in my experience, that if we look at respectable prices at harvest time, they'll tend to move beans off the combine more so than corn. There is more carry in the corn market to begin with, so if it's a question of how do I allocate space for storage, it's probably going to go more so to the corn and then end with deferred sales. But if we put, I think from where we stand, anything higher, I think you're going to tend to see beans move off of the combine. And I think in both cases, we have to keep in perspective that over the next 30 to 45 days, we're going to have the largest supply we're going to have all year long. So, there's still going to be an ample amount of supply out there right now, which should really temper any kind of a runaway market.
Yeah, I didn't hear anything about a harvest low there settling in for beans.
We might have seen that already.
Okay.
Maybe it was a summer low.
Well, let's ask, you left out one word, maybe because you knew this question was coming. James in Oklahoma asked us this week. He said, hey, how much will a slipping Chinese economy affect grain prices? 1 billion plus people still have to eat, Dan.
Oh, certainly. The Chinese consumer, just as a whole, seems to be spending less. And I think, when you talk about deflation already in China, and how can you have deflation when we've seen prices escalate for everything from fuel to housing or whatever the case may be. But I think, and you have a nation there, not only are they spending less, demographically, that country is truly a mess. It's an aging population, and speaking from experience, when you get older, you tend to spend less, you tend to eat a little less. So it's your priorities shift along that same area, and boy, that population is aging dramatically. So it's. And again, if you don't have the young people up, the people with truly with the appetite for everything, not just food, but for goods and clothing and you name it, it tends to be pretty harmful to the economy.
Moving to livestock, live cattle.
Very good.
Weather related market or packer back in control, slowing down the line market?
Well, it may be a combination of both, but certainly the hot weather over the last week has slowed down gains. So maybe we're having a little less tonnage potentially over the market here in the next few weeks. That said, what a phenomenal year in the cattle market. But we have just reached that point where I think consumers, particularly as you move into the fall, when we tend to cook outside less, a little less appetite for some hamburger there, and we look at the price discrepancy between beef against pork, against poultry. You can see this demand really start to wane pretty rapidly in the beef market, even with the lower numbers.
So. Well, and prices, if they do get out of control, again, if we have this inflation train that Powell thinks that we're going to have,
sure.
Beef's usually one of those places where it shows up.
Oh, sure. It's and again, I think we've been fortunate in the respect that we've as many issues as we've had within the economy and the worries about inflation. The employment has kind of been the balancing act there, and of course, that has been a major objective of the Fed, is to slow down the growth in employment. And if that's the case, and you start seeing fewer people hired or people start to lose their positions, you're going to tend to back away from the expensive treats at the grocery store as well.
Talk about an aging population. That's part of that factor too.
Oh, certainly.
That we haven't had in a while. Let's go to feeders then, because there is a word. I wrote it down when we were talking about China. You talk about deflation. There could be the recession, but the word now in feeders is stagnation. Is that what you hear?
Well, I think it certainly makes sense. One, if you're starting to see the fat market level off, peak out, even with lower feed grains, it's going to be pretty difficult to sustain any higher prices on that feeder market right now. So, yeah, I think when you look at the beef trade as a whole, the beef industry as a whole, it's probably not a time to be a real bull.
Is it time to cover feed needs with feeders right now?
Oh, short term, probably okay. There's probably when it comes to corn usage, certainly I would say it's for the next 30 days, 45 days would not hurt to have some coverage on for the upside. If you're looking over at the meal side of it. I keep hearing, granted, the meal market performed extremely well here this week, but you keep hearing stories that, meal is actually backing up the plants. It's the hot weather not only affects the appetite for the animals, hogs and cattle both, but it also messes around with the crushes a little bit as well. So I guess I wouldn't be overly aggressive on the meal, but same token, it doesn't hurt to have the next 30-day coverage on anyway.
That didn't seem to be impacting the hog market, or did it? Because we were lower on the week there.
Lower on the week, but tried to bounce back kind of late week. But hogs have enjoyed a pretty substantial rally over the last 4 to 6 weeks. So I think we're more in a corrective phase here right now. I don't believe the bull market's over, but we needed just to wash a few of those longs out of there for the time being.
Do you think the bears, though, are in control?
Of hogs?
Yeah.
I don't believe so.
Okay.
I don't believe so. I think they right now it's been more of a corrective phase than it is anything of a massive peak and a collapse to the downside.
Final 30 seconds, I have to go back to cotton
All
for a
right.
minute because I think today added a 6th consecutive day of gains.
Higher,
Is that a trend?
I think substantial in the respect that cotton really didn't react much off of that last supply demand report, and it was really the only commodity that had actual positive news. So I think this is finally coming to fruition. This takes us right up to some very key resistance. If we extend any higher next week, then you're into really a whole new market. So.
And guess what we're into? The end of the show.
Oh, no.
Thank you,
Again,
Dan.
thank you.
Good to see you. Dan Hueber, everybody. Thank you. That will do it for our analysis. We're going to put a pin in it here, continue our discussion about these markets. We have questions about basis in our Market Plus segment. You can find both analysis and plus on our website of markettomarket.org. All of the resources I just mentioned, they are free. YouTube connects you to our full program, Market Plus and the MTOM podcast. When you subscribe and turn on notifications by clicking that little bell, you will know before anyone else our work here is ready for you. Follow along at youtube.com/market-to-market. Next week, we look at the pending return of Congress and the focus coming back on the Farm Bill. Thank you so much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next. Because a pioneer, our name is our mission.
Sukup Manufacturing, celebrating 60 years of innovation as a family-owned and operated manufacturer of grain storage, drying, and handling equipment out of Sheffield, Iowa. Learn more at sukup.com.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.